morning, Happy New Year, and welcome to the Killik & Co market update. The FTSE has got off to a fairly good start this year despite the new lockdown that's happening here in the UK, and the reason is the latest political developments over in the US. Following November's presidential election, the Democrats had control of the House of Representatives but not control of the Senate. However, this week there have been two runoff elections in Georgia, and two Republican senators have been replaced with two Democrat senators, and that means there's now a 50-50 split between the two parties in the Senate. And in this situation, the Vice President, who is Democrat, gets the deciding vote. So as of this week, the Democrats now have effective control of the Senate. We know that Joe Biden wants to borrow more money and spend more on things such as infrastructure, and the fact that his party now has effective control means this is much more likely to happen. So therefore, this week we've seen a real rise in the types of companies that would be expected to benefit from a rise in infrastructure spending, in particular the mining sector. Let's take a look at this chart showing the FTSE 350 index over the last year in comparison to the FTSE 350 mining index shown by the green line. As you can see, the mining index has massively outperformed. Expectations for more infrastructure spend have been growing over the last couple of months, but you can see there has been a real rise in those expectations over the last week since the result in Georgia has been published. A consequence of more government borrowing and more spending would be higher levels of inflation. And if we look at the market, we can see that investors do seem to be expecting this to happen. We can see this by looking at the US Treasury market. The yield on the 10-year US Treasury has risen over the last couple of months. Back in March, the yield was only 0.59%, but now it's risen to just over 1.09%. And that tells us that investors have been selling US Treasuries. And this shows that they do expect inflation. If inflation is expected, nobody wants to be stuck holding an investment that pays a very low level of yield, because they would be making a loss in real terms once inflation were taken into account. So the fact that investors have been selling treasuries shows they do expect higher levels of inflation in future in the US. Also on the subject of inflation, the oil price has recently risen above $54 per barrel, and that's quite something bearing in mind the price went below $20 back in March. Oil is a key input into many global production processes, and therefore a rise in the price of oil can lead to higher levels of inflation. The recent price rise can be attributed to Saudi Arabia, who have just agreed some fairly significant production cuts that will last until March, and this will restrict supply and therefore push up prices. If oil remains at its current levels or goes even higher, this could lead to higher levels of inflation around the world. This week, data showing the number of new car registrations in the UK in 2020 has been published, and it shows a 29% fall in comparison to the previous year. Now, this is hardly surprising, bearing in mind that car showrooms were closed for most of the year, and also that people haven't really been allowed to drive anywhere. However, what's more interesting is the longer-term trend. Take a look at this chart here and see the decline that's happening in new car registrations over the last 5 years. A large part of this is likely to be the expected future growth of electric vehicles. Lots of people would like their next car to be electric, but they don't yet trust that the UK's charging infrastructure is adequate, and that's causing lots of people to delay their purchases. Huge upgrades to the UK's charging network will be needed in order to support electric vehicles, and that will be good news for the mining companies that we talked about in the first section of this video. Let's move on to take a look at next week. We're expecting results out from Tesco, JP Morgan and Reliance Industries. That's it from us. Enjoy the weekend, and we'll see you next Friday.